Okay, so I was asked to present on specifically 3 topics related to AASI. I'm going to try and make this as friendly to everyone as possible, since some of you are not using it, and some of you have been using it for quite some time. So it's kind of a unique group to present to. But we're going to focus on remittances, plan assets, and financial statements. And I'm going to go ahead and start with plan assets just to continue through Emmanuel's great presentation that he did earlier. So a couple of things that I want to talk about. These are typically the common questions that we have or problems that we have come up from some of our users, and even if you're not using our program, they may be relating to you in some way or another. So with our plan asset module, frequently what we see with sites that are not using AASI is the plan assets are kept in an Excel spreadsheet. That's the most commonly used thing, and the depreciation is manually calculated and then posted to your GL. In AASI, we have a plan asset module that is not directly tied to your GL, but it does post for you. So we've integrated this into the GL. Your plan assets are kept in our module. The depreciation rates that you want to use are kept in the module. And so the depreciation, which is required on a monthly basis, we do require depreciation to be done monthly. It calculates automatically for you with the push of a button. So some of the things that I wanted to go over with you, what we most commonly see as questions. I'm going to go ahead and open up an asset here that we can be looking at. So in regards to depreciation, the depreciation percentage that you want to be using on an annual basis. We use default depreciation rates. Each asset classification is given a default depreciation rate based on policies. It's already set up in the system. It's automatically configured. So for example, this is a building. You can see up here at the very top, the depreciation percentage is 5% annually. We have a lot of sites who, for whatever reason, maybe not as much with buildings, but a lot of times with equipment, you may not want to use our default depreciation rate. You may also have a policy that requires you to not begin depreciation in the in the year of purchase. Multiple different things that can come up can cause you to not want to use or not be able to use the default depreciation rate that's in the system as soon as the asset is purchased. So we have a lot of questions come through. How do I stop depreciation? How do I change the depreciation rate that's used on this asset? How do I delay depreciation until January or July of the next year so that I can be sure that this asset is not going to depreciate until I want it to, or when it is depreciated, it's going to use the rate that I want it to. So the default, again, is this up here at the very top. For this particular asset, 5% per year. If I want to use 0% per year or 10%, something other than the 5%, we have a special depreciation field down here in the slightly blue tinted field section. This special depreciation field will always override what's ever in the default depreciation field. So if you want to delay depreciation until the next year, if you don't depreciate in the year of purchase but delay it until the next year, you'll put 0% in the special depreciation field. That's going to tell the system to read this special depreciation field percentage rather than reading the default percentage. Now the one kind of somewhat frustrating or annoying thing about the policy that requires you to delay depreciation until the year after is that then when you should begin depreciation in the year after, you have to then go through each of your assets that were purchased and manually remove this 0% depreciation. Meaning the system doesn't have a way for you to, let's say you purchased your asset in March and the depreciation should not start until January of the following year. You'll need to put, as soon as you purchase the asset and record it in the system, you'll put this 0% depreciation in this field to tell it to not depreciate at all. If you do not remove the 0% depreciation come January, it will still not begin depreciation. Okay, so there's not a date. It's not a temporary field unless you remove it. You need to be the one that removes it. So the easiest way to do that, to get a list of all of your assets that you've purchased in the last calendar year or fiscal year, and you want to remove the 0% depreciation and begin depreciating the next year.
What happens if you forget to take the zero out for
So let's say now it's March of the following year. You should have begun depreciation in January, but you forgot to go back and change this special depreciation field. You've missed 2 months of depreciation at that point. Once depreciation is calculated, and it has to be calculated on a monthly basis, so once depreciation is calculated for January and February, you can't go back and recalculate depreciation. What you can do is go into that particular asset or assets and enter or add on a manual depreciation entry to account for those. Those manual depreciation entries, you'll come into this transactions tab here. In this screen, this field, this journal number field, drives what gets posted to your GL. If this journal number field is left blank, any of those transactions that have a blank journal number field are going to be posted to your GL based on the configuration that we have set up, which I'll get into in a minute here. So any of the transactions that are left blank here are going to be posted to your GL. If you don't want it to be posted to your GL, if the depreciation that you manually added, you also added it to your GL, then you don't want the system to add it again when you run your monthly depreciation, right? So there is this already posted box over here on the right-hand side. Basically, that's telling the system this is already on my GL. Because your plan asset module and your GL are not directly connected, the system doesn't know unless you tell it that this is already on my GL. So it will post anything that's in here that has a blank journal number field. Once you click this already posted box, it's going to put this OK in the journal number field. Basically, that means it's already on my GL. It's not going to give you a journal reference number, such as these down here, because it doesn't know what journal entry you use to post it, but it will put an OK in that field to tell the system, it's already on my GL, don't post it again to duplicate it. So it would require a manual depreciation entry to go back and redo the ones that may have been missed previously. So you've gone through your year, you've purchased all your assets for your year. As you've purchased them, you've recorded the 0% special depreciation to tell the system to not depreciate in the current year. Now it's January, you're ready to run your January depreciation. Prior to doing that, you would want to gather a list of all the assets that have been purchased in the last year so that you can ensure that you remove the 0% depreciation from those assets so that it will depreciate the very first time of the following year. The easiest way to do that is the plan asset report, the first one under this reporting tab. There are a lot of different options that you can use in this report to filter through your assets. In this instance, we want to be looking for any assets that have an acquisition date of January 1 to December 31, or a July to June if you're at an academy. So in this instance, we would search by transaction type. You're looking for acquisitions between a specific date range. So we're going to look for transaction type acquisition, and we're going to select a beginning and an ending date. Okay, these filters that I've applied to this report are going to easily bring up for me the assets that I would need to ensure that these have been set with the correct annual depreciation percentage rate, so that the first time that I calculate depreciation for that year, it's going to calculate the correct rate. Okay, so that's one of the most common questions that we receive is, how do I stop depreciation? How do I remove? How do I change the depreciation rate that's used? This special depreciation field right here is what's going to override the default rate that's in the system. Okay, so what we like to call it, the brains of the plan asset module is what controls where it posts to on your GL. How does it know that an acquisition transaction, how does it know what accounts to use for that? Depreciation transaction, how does it know what GL accounts to use? This is what we call our plan asset accounting configuration screen. This screen, we don't typically see very many people using this because they don't understand it for the most part. Luckily, in this union, we have Harold Green as the support system, the support for this program, and he is fantastic with this screen. So it should already be set up for you for the most part. However, if you have changes that you want to make, sometimes we have sites that go from using one plant fund to 2 plant funds, anything like that, we would need to adjust how how the system is posting, what funds it's using, what functions it's using, what account numbers it's using. So this accounting configuration is the brains behind the plan asset module. It's going to tell the system where to post all the transactions that are being entered for all of your assets. This first filter right here, transaction type, you can select what kind of transaction you want to work with or look at. I'm going to focus on acquisition transactions first because it's going to lead into another problem that we often see using this program. So I want to look at acquisition transactions, and I'm going to narrow down and focus on acquisition transactions for computers and equipment or furnishings and equipment. This source account relates to the account that the asset is classified under. So when you enter a new asset, you say whether it's a building or a computer or land, however you classify the asset, that is your source account. It's telling the system what is the classification for this asset. I'm going to search for the source account for 205-100, which is our furnishings and equipment category. So it brings up 4 transactions or 4 entries. This is basically telling you the entries that are going to be made for any acquisition of a furnishing and equipment asset. Okay, when you purchase a new asset that you're going to be classifying under furnishings and equipment, when you make the entry in your GL, we very strongly recommend that you do not debit the asset directly. So if it's a computer, do not debit directly the computers and equipment asset. The reason for that is because we utilize a plan asset clearing account. And if you bypass a plan asset clearing account, the system, as you can see here, one of the entries is to credit plan asset clearing. If when you originally recorded the asset, when in that original acquisition where you debited the asset and credited your cash or your accounts payable, that debiting of the account will offset this plan asset clearing as long as you use the plan asset clearing. So ideally, when you're recording your asset, you debit plan asset clearing, credit your cash or your payable. When this asset is then posted to the GL and your monthly depreciation, it's going to credit your plan asset clearing and debit the correct account based on the source account that you chose. If you didn't initially put it into plan asset clearing, it's still going to continually credit your plan asset clearing. It's going to throw off your GL. So the system, all of your databases, all of the AASI databases are configured to utilize this plan asset clearing account. So when you're recording your new assets, always utilize plan asset clearing as your debit transaction so that when it does your monthly depreciation, your monthly postings, it's going to properly take it out of plan asset clearing and put it into the appropriate category of that asset. You can also see here, this touches on something that Emmanuel mentioned in his presentation. Of these 4 entries, 2 of them are configured to post to Fund 24. By leaving any of these fields blank, it defaults back to how the asset was initially set up. So for example, all of these assets are set up under Fund 25. Okay, when you purchase an asset, you record it in your net invested, which is our Fund 25. By leaving these target fund fields blank, it's going to pull the fund from the asset itself. So if you have an asset that's set up in Fund 25 and this transaction has it blank, it's going to look for that fund in the asset itself. So it's going to pull it from Fund 25. These 2 particular transactions are posting to Fund 24. The reason for that is your acquisition payments and your plan asset clearing transactions need to be posted to your Fund 24. So we're forcing it to post to Fund 24 rather than Fund 25. 24 is your unexpended, 25 is your net invested. So when you're originally recording the purchase of your asset, you're doing your check or whatever your method of payment is, you're going to be working in the unexpended fund, your Fund 24. So plan asset clearing goes to Fund 24, and your cash or your accounts payable is in Fund 24. This now transaction, when it posts to your GL, it's going to move it out of Fund 24 by crediting the plan asset clearing and debiting your acquisition payments, your expense account in Fund 24. And it's going to move it into Fund 25 with these two transactions here. Okay, so this kind of the brains of the accounting system here. If you have something that's posting to the wrong account, the wrong fund, the wrong function, this is what's controlling your postings. This screen tells the system what accounts, funds, functions to utilize. Again, Harold has gone through, I believe, most of your databases or all of your databases to ensure that it's posting properly. We do see some variation between sites, especially in the asset side of it. Typically, your assets would use your balance sheet function, but sometimes if you want to categorize further, you can change that. And so Harold is able to work with you on that to make sure that things are posting and categorizing the way that you want them to be posted and categorized. Construction in progress. As Emmanuel touched on, construction in progress should not be depreciated until it's finished. So our recommendation, the NAD's recommendation has always been to not record any construction in progress in your plan asset module until the construction is completed. Once it's completed, then you record it as an asset. The reason for that is there's a couple different things. Recording it in your plan asset module in order to use a construction in progress account number, your plan asset module does not use construction in progress account numbers. So your plan asset module and your GL are going to be off. They're not going to balance. If you have plan asset construction in progress in your plan asset module, but not on your GL, or vice versa. So the construction in progress, when you make purchases for it, we have a couple of different construction in progress accounts. They're in the same section of your chart of accounts as the normal assets are, as your land and buildings and whatnot. But they are designated as construction in progress account numbers. I think one example is 208-300 is a construction in progress. Those go into that construction in progress account number until the construction is complete. Once it's complete, you transfer it out of that into your plan asset clearing account and make the record in your plan asset module to record the purchase of this asset. And your acquisition value would be the sum of all of your expenses to that particular project. Once it's in there, then the system is going to properly take it out of plan asset clearing and put it into your asset account. So if it's construction in progress, it's multi-steps to put it in construction in progress. Once it's finished, you put it into plan asset clearing, and then the system kind of takes care of it from there forward for you. Okay, any questions on the plan asset module? Any other things that have come up that particularly related to AASI? Yeah, Karen.
I have a question on the construction in progress.
Mm-hmm.
Our challenge is that we have a function, so a department within an expended plant
Mm-hmm.
that handles, say, furnishing and equipment for our Laurel Lake camp.
Right.
If I do not put a construction in progress line item there, they think they have $30,000 when we've already spent, say, $5,000 on construction in progress. So how do I address that? I can't just show them the statements because that's not accurate in a sense.
Right.
What
and
do you recommend?
You're particularly mentioning the statement of financial activity report.
Yes.
Is that what you're? Yeah.
Yes.
So that statement is a income and expense account essentially for each of your functions. By default, a asset or a liability account is not going to show up on that statement. So in that sense, there's really no way around it. An asset or a liability account will never show up on your statement of financial activity. I somewhat discussed this with Emmanuel and Barb a little bit also. So we don't have a solution for you yet in that instance in order to be able to provide them with one statement that shows all of that activity, but we can work with you on finding a solution for that. Anything else related to plan assets? Okay, remittances. The common questions that we have related to remittances, the most common one is regarding offering codes. Offering codes that are inactive, offering codes that you receive from your churches that don't exist, that you can't find in your database, so you just kind of end up passing them on up to the division and kind of just letting them figure out where it should be recorded, what's going on with this particular project. So one of the problems that the division as a general, in general, has across both AASI and TRS and all of these other remittance modules is church members hearing about a project or knowing about a project that they want to donate to, and so they'll just write it on their tithe envelope. It may be something that hasn't been active for 10 years. It may be something that we aren't actually, that the division hasn't set up a code for it yet. We don't have a means of transferring this money over to that particular project. So the church local treasurer records it on their tithe envelope, sends it up to the conference office. They don't have a code for it, so they just dump it into cash exchange, goes on up to the division, and also gets dumped in the cash exchange. At some point, somebody has to figure out where the money goes and how to get this to the right person, right? So oftentimes it falls on the division treasury department. So we're trying as much as possible to train at the lower levels what to do with these funds that come in for a project that you've never heard of, that you don't have a way of recording it. Back in March, I believe it was, when I was still working with the division, we met with some of the lead programmers, I guess, of the common remittance modules, or TRS is one of them, AASI, and e-giving, which members give directly through e-giving with their particular church. We've tried to standardize and sync the codes that are available in all three of these systems as much as possible. There's a lot of politics that get involved with that kind of work, but we try and make sure that the offering codes that members are seeing as available are the same offering codes that you have in your TRS or your AASI database. Oftentimes that gets lost in translation of everything. So the division is currently working on syncing those three programs. All three of the programmers that are needed are there in the same office, so for the most part anyways. And so they're trying to make sure that the offering codes that are available, so that if you have, for example, here at the union office, they have conferences that are both on TRS and an AASI. And if they have a TRS code come through that isn't an AASI, or vice versa, an AASI code come through that isn't in TRS, it creates a problem when you're trying to record those remittances. Once the division is able to successfully sync the codes that are available in all three of these databases, that should greatly minimize the amount of problems that you're having with this. Our recommendation for now, since you're still dealing with remittances on a monthly basis, and the division does not yet have a solution for this, and it could quite possibly be a long time until they're able to fully sync this. For the most part, as much as possible, the division's recommendation is if you know that a code or a project does not exist, or they're giving to something that was marked as inactive 10 years ago, we strongly try to encourage you to send it back to the member and ask them to redesignate it or to give it to another means. That can be very difficult, especially to do at the conference level. You don't know the members. It can be quite a nuisance to go back to the local church treasurer and try to ask them to go back to the member and say, look, this offering or this project is no longer accepting donations. Please, reconsider donating to something else. So this is similar. Maybe you want to give to this. So we are encouraging you to try and train your local church treasurers as much as possible. We have had a couple of conferences provide lists of the offerings that they would recommend using, the ones that they know are active and available. to their church treasurers so that they can, as much as possible at the local level where they know the members and they're able to contact them directly, to be able to utilize this list to base off if they see an offering come in that's maybe not something that is active or that they haven't heard of before. So that would be our first recommendation, is try and train your local church treasurers. Another recommendation is you do have the ability to create local offering codes in your database. You do not have the ability to create NAD offering codes or GC World offering codes. But to create offering codes for your local church or even at the union level, if the union wants to create a project that they want to initiate and encourage all the church members to give to, we also often see this used as an appropriation method, which wouldn't actually be a recommendation that would come from the NAD office, but it is utilized for that as well. So conference offerings, if you have a new initiative that you know that you'll be receiving monies in for this, this conference offerings title that is where you can create these local offerings that you can then encourage members to give to. You can give these codes out to your local church treasurers depending on what software they may be using. So this is a code that is a locally created code. When you're creating locally created codes, it's fairly straightforward. You'll come up with a code and a name, just like this one has. The setup for these codes is fairly straightforward. They're for the most part going to match between all of your offering codes. So you designate it as a conference level code. That's important because if it's designated as a union level code or a division level code, it is going to be included on your remittance up to the higher organization. So if it's an offering that is to stay at your conference level, it needs to be designated as a conference level offering code. Otherwise, the system will tell you to send it to include it up with your remittances to the higher organization. You'll want to tell it to accept entries and to be active so that you can actually use it when you're recording your remittances. And down here at the bottom, this is your debit and your credit information. So again, the brains behind where the system posts when it gets an offering receives monies into this offering code. How does it know where to post to? So your debit information here is always going to be to your remittance receivable account. That's not going to change for any of your offerings. And that's not something that I'm going to get into right now, but the way that AASI works is everything goes to remittance receivable. Then your credit account is if it's something that goes up to the division office or to the union or up to a higher organization, your credit is going to be to your remittance payable. If it's something that should be recorded as income to you, then this is where you can tell it what your income account is, what account number, sub-account, if you have a sub-account, what function to use. So this screen here is how you can set up your local offering codes if you have a new initiative that you want to start promoting in your conference, or I believe Tabitha has set up a couple of union codes that are used. So if you have appropriations that everyone gives to or other kinds of things that are not technically remittances, but you want them to be processed through the remittance module because it just makes it easier than having to send both a remittance check and an appropriation check. That is something that would have to be initiated by the union. Since it's a union code, they want every conference to be using the same code for it. So Tabitha, in that instance, would set up a union code in her database. She would then send you that information for you to set up the same union code in your database. And then on a monthly basis, if you're recording your appropriations or whatever you're giving to this particular code that she set up, you would be able to utilize that new code in your database as well. There is a tab here, 2 tabs actually, distribution and local distribution. I want to stress that this is not something that should be changed or managed by the local user. The way that these 2 screens here are set up is essentially to tell the system if you record $100 into some offering code that you created, does that $100 stay with that offering code? Does it get split 50-50 between other offering codes? Does it, like World Budget, get split between 18 different offering codes? What is that distribution percentage for each of the ones that it's going to receive? So this distribution is very finicky. and very easy to change and possibly mess something up. So we highly recommend that if you have an offering code that you want to set up that is somewhat complex and that it distributes to multiple different offering codes, or has different distributions, that you involve the NAD AASI team in setting this up so that you can be sure that it's going to distribute the way that you want. In addition to that, with world budgets and some of these other offering codes, women's ministries that distribute to multiple different ones, this is something that would be managed by the NAD AASI team, not at the local level. For membership, I believe this is a somewhat new policy, or maybe one that was maybe just more recently communicated, but the membership numbers that are used for your churches, specifically for the tithe and mission statement, those membership numbers should not be, or the NAD is requesting that they not be updated on a monthly basis. The membership numbers that are used in your tithe and mission report should be the membership numbers from December of the previous year, and should be used as December from the previous year for the entire next calendar year. So for 2015, for all of 2015, you would be using the December 2014 membership numbers for your churches throughout the entire year. What that means is, if you pull in from eAdventist the membership numbers for your churches on a monthly basis in order for you to track them, that's going to skew the tithe and mission statement reports that go up to the division office, because the membership numbers are then updated on a monthly basis rather than using the same membership number throughout the entire calendar year. So the membership numbers should be updated once in January prior to calculating your January remittances, and then not updated again until the following January. And that, again, can be done through eAdventist. You can pull in all the membership numbers based on eAdventist, assuming that they are using the up-to-date code membership numbers as well. If you're importing your remittances, your monthly remittances through Joule or through some other software, church accounting software, we do have the option when you're importing into AASI to either include membership numbers or to not include membership numbers. That is something that is configured on the local church accounting software, so it would be configured on Joule or on Lucas or any of these other church accounting softwares. They specify what figures come through in your monthly remittance reports. So if your membership numbers are coming through in your import into AASI, then they're being updated on your tithe and mission statements and translating up to the higher organizations. So just something to be mindful of. And if you are importing your remittances, that's something that you might want to be watching out for. Any questions on remittances, on the offering codes, anything else related to that? Okay, the other thing, yeah.
I was just going to follow up on the membership. With TRS,
Mm-hmm.
it does only change once a year. It pulls in from eAdventist once a year.
Okay,
Just to let you know, because I've spoken with Lauren on that specifically.
yeah. Okay, so the third topic is financial statements. A couple of things related to the financial statements. This is an example of a financial from this year. Many of you have probably seen the drill down capability in the financial statements. I'll just demonstrate it just quickly here. So this is something that we recommend, that if your finance committees or your board you think might be open to this, maybe not your board if you don't go down to this level of detail with your boards, but your finance committees, oftentimes we receive questions from the committees about what happened in this line item, what's going on in this. Showing them up-to-date, active information is one option that may be of interest to you. This drill-down capability will do just that. So once you calculate your financial statements, if you were to bring your laptop computer to your committees and present the financial statements there on the screen. This allows you to kind of provide an interactive presentation where you can drill down specifically on any line item and figure out all the journal entries that make up that line item. So I'll back up here for just a minute. This is the balance sheet here. By double-clicking on any of the line items, you'll get this pop-up screen that allows you to toggle in different views, mostly used for the income statement rather than the balance sheet, but it allows you to drill down to every level of the line item that you selected. So you could, we'll go down to this one. And you can see exactly what makes up the amount that's showing in that account. So we're going down to the sub-account level. This would be all the journal entries that make up that line item, and you can even drill down one more time and see the actual journal itself. If it was a JV or a accounts receivable journal type. If you attached documents to it, there's a scan document imaging capability in AASI where you can scan in documents as backup documentation. This drill down will allow you to even view those documents in that screen as well. So you can see here, this attachment icon shows that there are 0 documents attached. But if you had a document attached to any of these transactions in here, you would be able to drill down to that document to see those attachments as well. So it can be, yeah, go ahead.
How do you print that page?
This particular page, there's not a print button on this screen. You could do a screenshot if you wanted to print just this, the breakdown of that. If there were a document attached on here, you could open that and open as a PDF, and you can print that PDF just like normal using normal Adobe. So there are some different, some kind of powerful tools that can be used in this that you can drill all the way down to see an invoice or any kind of backup documentation that was attached into those transactions. I'm going to switch over here to our income statement. Using the income statement, using the drill down in the income statement gives you a few additional capabilities here. So if we drill down to any of these line items, with the income statement, you have potentially multiple different functions, multiple different restriction types that can be used with your income. So the default is that it's going to toggle by the account number. So this is showing you that all of the account activity in accounts that start with a 6-7. That's what it's showing you initially. If I were to toggle over to see by function, it would show me by function which functions have activity in those particular account numbers in account number 6-7. So I can see that 30,000 of it is coming from function 4282 and 273,000 is coming from 1211. So it can give you this different breakdown of where the amounts in those line items are coming from. There's also a toggle by period. Let me back up one. So I ran this statement for June 2014, which is the end of an academy fiscal year. So if I were to run this for March or for October, this period toggle is going to show you the balance in that account for each period up to the period that you ran it for. So I ran it for all 12 periods, so it's showing me the balance in the account, this particular account for each of those 12 periods. If I ran it for March, then it would show me the balance in that account for July through March. So this is a different way for you to be able to see at each increment, at each month, what was this account balance? What did this line item look like? If you ran a combined fund, it probably wouldn't apply very often. It'd be fairly rare to be able to see accounts that have activity across multiple funds, because for the most part they're going to be in their own separate columns. Or restrictions, if you have income that has some restricted income and some temporarily restricted income, you could see how much of the account balance is made up of restricted income versus how much is made up out of unrestricted income. One of the other things that I wanted to mention, I'm not sure if those of you that have been using AASI, that are using AASI, in the last release of the new update, they added 2 new reports within AASI. one to run your balance sheet and one to run your income statement within the program itself. So without calculating your financial statements, you can obtain a quick snapshot of your balance sheet and your income statement. So that's actually in the program under the Reports tab. And it looks like I'll actually have to toggle over to a different database here just real quick. So there are now 4 reports within the program itself that are also in the financial statements. They're always included in financial statements. These specific 4 reports can be run individually through the application without having to calculate your financial statements. So it's under your Reports tab. It is this first one here, the financial activity, which is the one that Karen mentioned before. This is essentially an income statement for each of your departments. Your activity by function, and then these 2 new reports here, financial position and your CNA, or your income statement. These 2 reports are your balance sheet and your income statement. The same that would be calculated in your Excel financial statements. So here you can select which fund and which period you want to run the report for, and it's going to give you a balance sheet or an income statement just as if you had run your financial statement. So now you no longer have to run those in order just to see your balance sheet or your income statement. They're available within the application itself. Okay, one of the things that comes up quite often in these kind of meetings, it will come up, I believe, this afternoon in the GCAS presentation, and it came up yesterday in our business managers meeting. But that's the AASI financial statements as it relates to GCAS or GAAP accounting standards requirements. The AASI financial statements technically are not GAAP financial statements. They don't qualify as GAAP financial statements. The main reason, I believe this is 99% of the reason, and if there's more, then I'll have to be corrected on that, but I believe 99% of that reason is related to the footnotes. We do not have footnote capabilities that pull from your financial statements. Meaning in your footnotes, if you look at your footnotes, you'll see a lot of numbers come through in your footnotes that tie into your financial statements. GCAS has a wonderful program that helps them pull in those information, and we've been in a lot of discussion with them about AASI having that same capability of having kind of a standard set of footnotes that can pull the information, combine it with the AASI account numbers to give you proper GAAP footnotes. We have not gotten there yet, and I quite honestly don't know if we ever will get there. It's quite a complicated process to be able to pull in those same kind of footnotes. So as of right now, the footnotes that come through AASI is essentially just a copy and paste. When you choose which fund you want to calculate, which period, there's an option in there to add your footnotes as well. You can copy and paste the footnotes that you receive from GCAS. That's typically what we recommend at this point, is just copy and paste the footnotes in. I've done that in this particular example. So your footnotes come through on this footnotes tab down here. Looks a little bit funny the way that it pulls it through. So you actually have to double click on this link and open. And it's going to open your footnotes as you copied and pasted them into that screen when you first calculate your financial statements. So it is not a dynamic footnote capability, does not qualify the financial statements as a whole. If you were to run your financial statements, print them off and hand them to the auditors and say, these are our GAAP financial statements, they're not going to agree with you. They have to have the footnotes included, and the AASI footnotes do not automatically pull in those footnotes as if, like they would qualify with GAAP. So you would have to copy and paste them into this footnote screen in order for them to be included in your financial statements and to print with your financial statements. Any questions on that, on the footnotes portion of it, on having a financial statement that qualifies as a GAAP financial statement? We typically also recommend with your financial statements for your auditors, run the combined financial statement. If you have multiple funds, which most of you probably do, your combined financial statement will separate each of these significant funds into its own column, which I believe is what they're looking for. So it'll run your operating fund, your plant fund. If you have other funds, revolving fund, they will each be in their own fund, and that's typically what they're looking for. So the OP, operating combined fund financial statement, is what they're looking for, and please remember to also copy in your footnotes so that they can be included in that as well. And the last thing that I wanted to touch on, many of you have probably seen the Excel template that GCAS uses to create the financial statements. And in order for you to build your own financial statements, there's one report that I would recommend using that makes it a lot easier for you. We call it our trial balance analysis report. So it's this TB analysis tool. This report provides you it's a trial balance, but it provides you a more significant breakdown of the account numbers that are used, so that you can easily pull all of the accounts that are cash and cash equivalents, all of the accounts that are accounts receivable. You can easily pull them in and paste in the numbers if you're building your financial statements using that GCAS template. Typically, this is the best report to utilize for that. So this TB analysis tool, you would want to run it for the selected month that you're looking for. I'm going to run this one for June. The important thing to remember with this one is, in order to get an overview of your entire financial statements, basically in order to get a report that's useful for you in building a financial statement, you would want to select the function 0. Now, 0 is not an actual function that is utilized in our report, in our system. Our functions are 4 or more digits long, but 0 essentially covers all of your functions. 0 is the function for all functions. So it's going to sum all of your functions together. So we would do 0 all functions. In this Others tab, there are a lot of options that you can use here. The one that I would recommend possibly using would be this with subaccount. If you have multiple subaccounts that you're going to be breaking down in different manners to put into your financial statements, or you want to pull only one subaccount out, you would want to see that subaccount breakdown. Typically, it's not going to be useful for me in this instance here, so I'm just going to leave it the way that it is. And I'll run this report. This will give you a bird's eye view of your financial, of all of your accounts. So the first line item that comes up is it's called 0 all assets. 0 all accounts. That should show you whether or not you're in balance. So for the most part, it's going to show $0 in it. So parents of all accounts right here, the ending balance is 0. That shows you that you're balanced. If you have something that's not balanced, then there's a problem with your database, and the entity department wouldn't look at it. So then you can see all assets, the next line item here. This will tie into your balance sheet. That's going to match your balance sheet total assets line item. You can then see the breakdown of this much is current assets. Under current assets, we have cash and cash equivalents. Under cash and cash, the next one would be accounts receivable. Is this 90,000? So those are what would show through on your balance sheet. If I pull this 90,776, and I bring up my balance sheet here, 90,776. So this essentially can be used as a report that can help you build your financial statements so that you can have them match, pull the appropriate account categories and classifications into that GCAS template to help you get through that process. So again, it's allowing you to look from the top down, starting with your assets, looking down at each category of assets to see what the breakdown is, how much of it is current assets versus long-term, how much of it is cash versus accounts receivable, those kind of breakdowns. So again, that is the trial balance analysis tool. And I did also want to mention something that has come up. I've actually gotten 2 questions on this in the last week or so. this balance type down here, adjusted versus legal. There are two options. Adjusted balance typically relates to your trial balance. Legal balance generally relates to your general ledger. So what the difference is your legal balance, the easiest example to use is at the end of a year, you close out all of your income and expenses to your net assets. So as of December 31 or June 30 or that weird period in between, your income and expenses legally are closed out. They don't have a balance. So your legal balances for those accounts are going to show zero balance. If you were to give a legal trial balance, a legal post-closing trial balance to your auditors as your trial balance, it's not going to show any income or expenses on it. Everything's going to be closed out to your net assets already. So the adjusted balance functions as a pre-close trial balance. It's going to show all of the account balances prior to closing them out. So again, typically your adjusted balances are for your trial balances. For the most part, you want to run your trial balances as an adjusted balance. Your general ledger would be run as a legal balance. The system does default to those selections, so for the most part, you don't have to change them. But if, for example, we were working on some post-audit reconciliations and whatnot just last week, and we needed a post-close trial balance from the system to make sure that our net assets matched the GCAS net assets. You would want to run a trial balance with the legal balance selection in order to obtain a post-close trial balance. The other area that affects is if you run out of nature adjustments for your accounts receivables or your payables. If every month, if you transfer your credit balance receivables to an AP or vice versa, your debit balance payables to an AR, if you do that process on a monthly basis using our out of nature monthly process, this adjusted balance will take that into account. Your legal balance, legally those accounts are still AP debit balances or AR credit balances. So legally they haven't changed the balance, but an adjusted balance has been adjusted for the financial statement so that your AR credit balances post as APs and your AP debit balances posted as ARs. Okay? Any other questions? Okay, I believe that's all I have, and I think it's lunchtime.